If you are an entrepreneur or senior level executive, you must definitely have heard about the term break-even or break-even sales. So why this term is so important for the businesses? Hi, this is Amit Kadam, founder of US Business Solution. Let's go to the presentation to understand this term in great detail. Presentation about break-even sales. So let's see the definition of break-even sales. So it is break-even sales is the value or units of sale done to achieve so much of contribution which is equal to fixed cost of the organization. Now let's understand what is contribution. Contribution is sales minus variable cost. So break-even sales is the situation where there is no profit, no loss. Okay, so let's break it up. So in simpler terms, okay, so you're doing sales, it has some variable cost and you get the contribution. Okay, so much of the sales you have made, that so much of the contribution you have earned after minus deducting the variable cost, which is equal to the fixed cost. Okay, so contribution is equal to fixed cost, so there is no profit, no loss situation. Okay, so why this term is important? So importance of break-even sales. So it is only after break-even sales that the company earn profit, any profit through their business. Therefore, all contribution earned after meeting fixed cost is equal to the net profit of the company. So what is the net profit of the company? All the contribution which is earned by the company after meeting the fixed cost is equal to the net profit. Okay, that's why the company is more interested in knowing the break-even sales. Now let's see the break-even sales for manufacturing industry and service industry. So first it is manufacturing business. So let's take an example. Selling price per unit is 100, variable cost per unit is 60, and the contribution per unit is 40. So now contribution minus fixed cost is equal to net profit. That is our equation. Now say for example you have the fixed costs, for example rent, salary. These are fixed for the period. So for per annum it is 2 lakhs, per year it is 2 lakhs. Okay. So how we will calculate the break-even sale units? So we will calculate by the formula, that is total fixed cost divided by contribution per unit. In this case, total fixed cost is 2 lakhs and divided by the contribution per unit 40. So you get 5,000 units. So 5,000 units you need to sell to reach to the situation where there is no profit or no loss. Anything after that, whatever you sell. So suppose you sell 7,000 units. So contribution on 2,000 units will be your profit, net profit of the company. Okay, so you can also arrive the break-even sales in value. Okay, that is overall. So 5,000 units into selling price unit of 100, which gives you value of 5 lakh of rupees. So 5 lakhs is the break-even sales value. Okay, so now let's go to the break-even for service industry. Okay, so if there are multiple services provided by the business, the break-even sales can be measured in terms of value. So generally, services industry have, like, one business is giving service 1, service 2, service 3, service 4. Okay, so each has its own structure, that price of that service, there is some variable cost and there is some contribution. That is for 1, for 2, for 3, for 4. So that can be multiple. So it is better to measure it, the break-even sales, in terms of value. Okay, but in case there is only standard service or standard structure, okay, only one service you are giving and there is standard structure of sales and variable cost, then the break-even sales can be measured in terms of number of services and value, just as in case of manufacturing business, it will be the same. Okay, so for example, we'll take your service selling price per service is say 500, variable cost per service is 200. Okay, so contribution for one service is 300. So contribution minus fixed cost is equal to net profit. That is our formula. Then in case if there is, in this example we take as fixed cost of 60,000. Okay, so what will be the number of break-even number of services. So it will be total fixed cost divided by contribution per service. Okay, so 60,000 is your total fixed cost per annum divided by contribution per service is 300 is equal to 200 number of services. Okay, so 200 number of services you have to give to achieve the situation of no profit, no loss. Then that can you convert into again sales value, break-even sales value, which will be 200 services into selling price of 500, which will be 1 lakh. So if you end the revenue of 1 lakh, okay, it will you can meet the fixed cost of 60,000 and there will be no profit, no loss situation. Anything, whatever services you give after that, okay, that 200 services will be your net profit of the business. Okay, so this is the case when there is only one service and that is standard structure. So where there are multiple services, the business can budget the revenue through the composition of number of services in each category, the 1, 2, 3, 4, to earn contribution to meet the fixed cost of 60,000 and thus achieving break even. That is, from service 1, 2, 3, you get contribution of say X plus Y, Z amount. And when you total it up, you can get the contribution of 60,000, which is equal to fixed cost. So you are coming to the no profit, no loss situation. Any services of the category 1, 2, 3, 4, it will be your net profit after that break-even point. Okay. So let's go to the conclusion part. So the break-even sales is important because it is only after achieving that the company start earning profits for itself. Okay. Number 2, break-even sales can be calculated in units or numbers and value. Number 3, it is first target that the company wants to achieve so that there is no profit, no loss situation. Now we can take an example of cricket match like test match. Okay, so the team batting second, they achieve the score equal to the team batting first in their first inning, suppose. So they have made the score. So that is our break-even. Like in this case, it is a break-even score. And after anything score that they score after that, that will become the lead score. So that will be again a lead score for them, which in our case is the net profit of the company. Anything over and above the break-even sales is the net profit of the company. Okay, so this is a good metric for new businesses who would like to establish their businesses in such a manner so that they break even as soon as possible each financial year. So here suppose financially starts from April to March. So maybe in 4-5 months after, in maybe September, October, you are able to sell so much, you are able to earn so much contribution that your fixed costs of the whole year are met. Yeah, you have to understand that fixed cost of the whole year are met because fixed cost is fixed for the period. So you can know beforehand that what is the fixed cost of them. So after 4 months, 5 months, if you achieve that fixed cost, anything you sell after that, 4-5 months period, it is your net profit of the company. Okay, so thank you for watching this video, and if you like this video, please subscribe to our channel so that you can watch more such videos. Okay, so Amit Kadam signing off. Goodbye, take good care of yourself and see me in the next video. Thank you.